You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 15 programs for you guys to choose from, including many, many years worth of great archived episodes and conversations and guests on this here fine program, Volatility Views, as well as the other 14 programs on the network, maybe Option Block, Float Your Boat, or Advisor's Option. If you are an advisor, or perhaps looking for an advisor and you want to learn a little bit about options, that might be the program for you. Or, of course, the old Options Bootcamp, or This Week in Futures Options, or maybe you want a little bit of silliness with your business news, and the business show maybe is the way for you to go. All sorts of fun stuff. You can find it all, the mothership, the flagship, theoptionsinsider.com. While you're there, click on the Insider Radio Network tab, and your journey has begun. Also, you can find us pretty much wherever you find your favorite podcast programs: iTunes, TuneIn, Stitcher, and so on and so forth. And of course, via our mobile app. I had someone ask me the other day and tell me that he had to switch from the iOS app we have, just using the standard iOS podcast app, because he couldn't download his episodes, but I had to walk him through how to do it. So you can, yes, I said it before, you can download the episodes via our app as well. It's not just streaming. If you're just streaming, it wouldn't be anywhere near as useful. So if you're going on a plane or a train, you want to queue up a few episodes ahead of time, you're on Android, you're on Kindle Fire, or maybe even on iOS, you're sick of the iOS podcast app, well, then you can grab ours. All the shows are there. The instant they're available there on the app. You can download them or stream them, whatever your choice is, and have a good time doing that. And of course, however you get to us, including streaming live, if you are joining us via Mixlr, stream the show live every Friday, noon Central, 1 p.m. Eastern. Hope you guys can join us there. Follow us on social media, or follow us on Mixlr, MIXLR. That's where you can get the link to do that. If you are on Mixlr and you follow us, you'll be notified the second we go live, and you can follow along. You can ask questions in the chat and all that other fun, good stuff. All right, and we have a bit of a rotating panel today because Mr. Rhodes, our usual corner office man, is on assignment. I believe he's in either San Fran or somewhere else, maybe even Baton Rouge. He's somewhere over there, hither and yon. He's been in a couple places this week. But moral of the story, he could not be here today. And also, Greasy Meatball is over there at his educational event, his Professional Trader Summit, from which we recorded our option block yesterday. You guys are probably checking that out right now on the network. I believe it went live a few minutes ago. So he was hoping to get him on in a little bit, but don't worry, it's not just me on the old program today. We have an able stand-in, an old friend of the show, even though he hasn't been on it's been quite some time. He is Bill Luby, the man about town over there at VIX and More, as well as a number of other volatility initiatives he has going on. Bill, welcome back to the Volatility Views program.
Great to be here. It seems I'm only here when there are 2 or 3 standard deviations away from normal vol, but that works for me.
Hey, it wouldn't be fun if you were here on the easy days, right? Anyone can do the easy days. It's when things get a little interesting, a little crazy, a little fun. That's when the show gets a little bit more fun. And Bill, like I mentioned, it has been quite a while since you've been on the program. So why don't we perhaps start there, catch us up, catch our listeners up. I know you obviously have VIX and More, your blog there, but you're working on a lot of other things over there as well. So maybe start for our listeners who aren't familiar with you, give them a little bit of overview of what it is you do, as well as catch us up on some of the stuff you've been working on and doing since the last time you were on VolViews. I think it's been at least a year.
Sure. Let me start with VIX and More. The blog is still active, has 10 years of archived information, and there are lots of stuff volatility related. And particularly if you want to go back more than a couple years, it was probably maybe the only voice in the woods back in those days. But that I have every intention of scraping off some of the cobwebs and becoming a more active poster. And the last 2 years, I've been focusing most of my efforts on launching an investment management business, an RIA, Luby Asset Management, and that manages, among other things, 3 volatility strategies. So I'm now have a media hat that I take off periodically, put on my investment hat, then put on my media hat, and it gets confusing at times. But it's fun having those things going. I have some other things as well, but those are my 2 main focuses going forward.
So you mentioned you do some volatility strategies. Really quickly, give us a bit of an overview. Are you solely in the options? Do you do the options and the futures? I'm talking VIX, obviously, or SPX, or maybe a little bit of all of the above, or is it the flavor of the week? What are the particular volatility strategies you focus on?
Yeah, all the above and then some. The focus is on indices, specifically SPX, RUT, VIX, as well as the entire ETF space where I capture every asset class. A lot of the commodities are a GLD, USO, UNG, those types of things. We're looking volatility risk premium. We're looking at arbing the VIX term structure. We're looking at a bunch of other things, long, short. So there's many funny looking zebras and other animals in my volatility zoo. That's why I run 3 different strategies to try and be able to customize people that like a certain slice of that pie.
Well, Bill, you mentioned you're coming on at a very interesting time here on the old program, and from a volatility perspective, it certainly is an interesting time. As we work to beam the Greasy Meatball on here from the home of all things VIX, all things volatility. He should be beaming in from the SIBO if he can get all their Wi-Fi issues sorted out over there. But looking at the day we're faced with and the week it's been kind of an interesting one. We are recording and indeed streaming live here on Friday, July 22nd for all of you playing along with the home game. Most of the major indices up slightly on the day. The S&P up nearly 0.5%. The Q's up about 0.5%. The Dow, a bit of a laggard there, only up about 1/4 percentage point or so. And of course, all that upside love having VIX Cash take a little bit of an exhale today, right back down around that 12 handle. Bill, it's been kind of interesting to watch. We haven't had you on in quite some time, so we haven't had a chance to chat with you about all the crazy things that have been going on in the world of volatility. But of course, the last month or so has certainly been an interesting place to watch volatility. We, of course, had the ramp up to Brexit. And, of course, where a lot of people, ourselves included on this program, were maybe kind of questioning a little bit when people seemed to be not at all reluctant to blast away at volatility going into that weekend and coming into that event. Certainly on that Monday leading into the Brexit announcement or the Brexit final vote, when there was that final poll that seemed to show that that they weren't going to leave, and people were just crushing vol willy-nilly, it seemed like, and a lot of us here on the show thought that might be a little bit, perhaps, a little bit putting the cart before the horse, and of course the whole Brexit thing happened, and volatility spiked, then almost just as immediately imploded yet again. So maybe before we even get to today's, where we are now vacillating around this 12 handle, walk us through kind of your thoughts on the last few weeks, because it has been a pretty tumultuous time from a volatility perspective. Certainly, I'm sure for you, you've been out there actually managing volatility strategies in this environment. What's that been like for you over the past few weeks to month?
Well, if you were short vol going into Brexit and you held on and you didn't look at your P&L in the interim, you look like a genius. On the other hand, you might have been thrown off the roller coaster if you actually opened your eyes for a period. It's interesting, in a way, Brexit is somewhat of an extension of what we've seen over the last year or two, and that what I'm calling the cycle time of volatility spikes and mean reversion has continued to compress. It used to be that you'd see a gradual build and some spikes in volatility, and it would take a long time for volatility to ratchet down to where it started pre-spike. Now you're seeing such aggressive moves and such rapid retracements that it's really the volatility environment is not at all what it was a couple of years ago, and there could be any number of reasons that are causing that. But I think you have to look at the whole cycle time of volatility different as what you used to. And Brexit was a perfect example of something that went up and down so quickly. That's unlike what we've seen before. But you can go back to January and some of the China issues. You can go back to last August, or you can look everything from Ebola going forward. It seems these spikes are happening faster, and they're reverting faster. And now, obviously, that doesn't mean that the future will always be that way, and that when people are caught offside as they were in Brexit, you have an opportunity for some prolonged pain that may stretch things out. But we haven't seen that type of event yet recently, which is interesting.
Yeah, now fast forward, of course, to where we are today, and there still are a lot of, unknown unknowns floating out there in the ether. Of course, the Brexit thing is in the rearview mirror, but really only slightly. Much of that is still to unfold ahead of us in the forthcoming months and indeed years as you figure out how they're going to leave and what format it's going to take and how long it's going to take and all the various minutiae therein of all the international trade deals that have to be adjusted. So the notion that Brexit is over and done with, I think, is kind of silly. But also, we still have now all of a sudden the non-farms put the Fed back in the crosshairs again. The will they, won't they dance of will they cut yet again back on the horizon. And of course, we are right in the middle of earnings season. We're seeing a lot of names popping off. We'll get to those in a little bit. But as you mentioned, Bill, it's kind of an interesting environment we find ourselves in right now. All these kind of unknowns still floating around in the ether. And as I mentioned there at the top of the show, VIX Cash hovering right around a fairly anemic 12 handle right now. It's kind of interesting. What are your thoughts on the current vol regime that we're in? Do you think this is kind of fairly priced, what we're seeing right now? Or are you more in the camp of, there still are a lot of other shoes to drop out there, and maybe a 11 to 12 handle in the VIX right now is perhaps underselling things a little bit?
11 and 12 may hold for a while. You have a couple of competing premises. First, you have a market that was consolidating within a fairly narrow range for 2 years and has suddenly broken out. And people now think that the need for protection, the need that SPX is going to revisit 1810, or maybe even that SPX is going to drop below 2100, is much less of an issue than it was only a couple of months ago. So you have people jettisoning protection, and you have all this cash on the sidelines, and you have managers that maybe have missed a portion of this rally that are thinking, I've got 5 months to make up my year, or I've got this bull market that I need to get back in on. So there's a lot of reasons to be long, and you have earnings that suddenly look like they're turning around. The dollar doesn't seem causing as much pain as it used to. We're not panicking about oil, which seems to have found some stability. On the other hand, so those fundamental and technical factors are all positive. On the other hand, as you say, the Brexit, that's a long game. It's going to take a long time to figure out not only how that plays out, but what the repercussions are in Italy and France and elsewhere. We've even got the European the banking stress test next week that nobody's even talking about. But all we need is for Deutsche Bank to start to take another nosedive, and you can see panic come back pretty quickly. And we haven't even talked about the U.S. election. And no matter who gets elected, the range of potential policy alternatives, I think, is as big as it has been in a long time. Unless people are counting on gridlock to bail them out, there could be some huge political and economic surprises coming up in November, and that's not that far away.
Yeah, you're right. No, we haven't even really expanded our scope that far into the election. There's enough madness in the near term to focus on before we can't even get to November yet. We have to worry about next week and the week after that. But you're right. There aren't many elections in recent memory you can think of where there are two very much polar dichotomies almost floating around there from a point of view. It probably would be a little bit worse, a little bit starker contrast if it was indeed Sanders versus Trump. That would be certainly the true yin and yang of the market push and pull on that election, particularly if it was a close election coming down to the wire between a Sanders and a Trump. You could certainly see just how much volatility there would be in the marketplace as every poll moved back and forth. Hillary, not as much. She's a bit more of a known quantity, but that said, of course, she has to embrace some of those Sanders platforms into her own in order to really kind of embrace some of those voters. So she may be pulled a little bit closer to that Sanders rhetoric. She's also already talking about a transaction tax, which is something that was a big part of the Sanders campaign. She's dialing it back a little bit, though. She's talking about a tax on canceled orders, which is kind of interesting in and of itself. I haven't really heard that nuance bandied about by a politician before. Usually it's kind of just the blanket tax on everything we hear all the time. So to hear any degree of nuance in that conversation, I think was a little bit heartening, even though the notion of a transaction tax, I think we all know our thoughts on that. But still, interesting stuff. Speaking of what's interesting stuff, looking at other indicators we like to keep an eye on during the week here, our old friend VVIX, the volatility of VIX. Bill, we had a listener recently ask us, why the heck do they disseminate this thing? What's the point of it? It doesn't trade. And, we use it a lot for a lot of different things, including as an indicator of perhaps what's lurking out there. And VVIX, of course, like I said, the volatility of VIX. So when it gets high, when it gets elevated into the recent range that we saw it not that long ago, up in the 130 range or so, like it was back in mid to late June, then that indicates something is afoot. Something is going on. VIX is moving and shaking, rocking and rolling. Right now, hovering right around an 88, 89 or so. So still mildly elevated, but nowhere near the top of that range. It's more towards the lower end of that range, which seems to bottom out around the 75 handle or so to the downside. So about 10 to 12 handles or so, 13 handles higher than that right now. So interesting out there as well in terms of what's going on in the VVIX land. I like to talk about VIX Futures a lot. It's been kind of interesting to watch kind of how much premium still remains out there or remained out there in the VIX Futures, Bill, and kind of how long it's taking these things to really to come together, the VIX and the VIX Futures. Do you utilize a lot of the futures in your trading out there? And what are your thoughts on how the term structure, typically an interesting place to watch these days, certainly, particularly on the near portion of your curve. What's your thoughts on how it's shaping up there from a VIX Futures perspective right now?
Yeah, personally, I trade the entire VIX product landscape, and I assume all the listeners know, and if they don't, they need to spend some time in this. But every single product. So
you were the one guy trading VXST then? That was you? Okay, just good to know. I want to know who that one guy was.
I had hoped that would be more of a success than it was, because I think it would have been an incredible product to trade. Unfortunately, it didn't quite make it out there. Yes, I was the first kid on the block, and maybe the only kid in the country that actually played in that sandbox for a while, but we ran out of sand, unfortunately. But yes, the VIX futures underlie everything, whether it's the options, which I trade heavily, the ETPs, which I also trade heavily, the futures, which I trade less often. So that's what you need to watch, because one way or another, you're going to be talking about roll yield, whether it's convergence of the options and the futures at the end of the cycle, or whether it's the daily time drag on the ETPs or whatever. But you need to focus on the entire curve, and particularly the front end. And it's amazing to see the distance between the front month and the cash, and also the steepness. And we're just at the beginning of the VIX futures cycle. We just rolled, and to see that the front month, second month contango is right now over 13. That's shocking. And typically what happens with whether you're in backwardation or contango, the steepness of the curve tends to increase over time. And so it's not that unusual to end up at 13% at the end of the cycle, but it's very, very unusual, maybe unprecedented. I didn't run the numbers to see it at 13 plus right at the beginning of the cycle.
Yeah, I think that term pretty much sums up a lot of what we're seeing right now in the realm of volatility, and have seen, of course, over the past few weeks. Unprecedented, historic, all of the above. Those adjectives get thrown around a lot these days out there in the volatility landscape. Of course, we don't have Mr. Russell this week, so I don't get a chance to play my favorite transition of the program, which is Russell's Weekly Rundown, where Russell takes us through some intriguing activity he's noting out there in the realm of VIX Weekly Options, the replacement, the surrogate for the much maligned VXST, Bill's favorite product of old out there in VIX land. I was wondering who the one guy was, and now I know it was you. But let's instead turn our attention to the mothership, the big VIX options. And it was, of course, coming to the end of the cycle there, so that gave us a little bit of juice. But aside from that, it was a fairly light volume week, pretty much across the market. We hit some pretty anemic lows on some of the trading days this week, and VIX was no exception to that. Tuesday kind of probably being the banner day of the week, with about 775 or so thousand contracts lighting it up. The rest of the week substantially less, about 550 on Monday, 338 the nadir of the week there on Wednesday, and about 560 on Thursday. And so far today, we're on pace for a pretty light day as well, about 194,000 contracts, having gone up a little bit past halfway through the session here. VIX still averaging right around that 600,000 contract level a day these days. It's kind of been vacillating a little bit more, a little bit less, but it's essentially not a ton going up this week to really change it. We'll kind of parse some of the bigger trades we saw, and then still, when talking big trades this week, it wasn't, like I said, a lot really lighting it up. For example, the biggest trade of the day today so far on Friday is a bit of an inverse. Not usually talk about 1x2 call spreads. This is the 2x1 call spread. We got the SEP 1926. He's going the other way. He's trading the 6,002 roughly or 6,000, so the two side, I should say, of the 19 calls, and then trading 3,000, so the one of the 26 calls, so doing the opposite instead of the 1x2, a 2x1 on that print. Looks like that was going up with paper selling that, so kind of a bit of a funky one on that one. We have to dig into the numbers a little bit. Kind of just went up right before showtime, haven't had a chance to really parse it. Like all the executions out there, it takes a little bit more nuance to really dive into that. And again, Thursday, not the most active day as well, but we did see about some of the bigger spreads. Looks like, or bigger trades, I should say. One of them was an AUG-OCK. You can call it a roll, time spread, call it what you will. It was the AUG-OCK 16 call spread going up here. 10,000 times on this one as well. Again, doing it exactly on splits here, mid-market. So interesting stuff here. But yeah, 10,000 times on that. Also, paper buying an AUG vertical on Thursday to the tune of the AUG 2023. Doing that about 5,600 times, gobbling up that one up. Could be perhaps closing a short vertical from before. Again, so much OI on all these strikes, particularly near the front month here in VIX, that it's kind of difficult sometimes seeing the forest for the trees. Also another vertical going up, about similar size. This time it was the AUG 1722 going up for about 5,100, 5,200 contracts there as well. So some interesting paper lighting it up across there on a relatively otherwise, uninspiring day there on Thursday. Wednesday, I guess you can call this maybe, Bill, a bit of a funky time strangle, perhaps. Interesting. Maybe he's taking off his bearish viewpoint as well there, and or bullish, I should say, really on the puts, and then flipping it to a different side. Either way, however you want to view it, it was the AUG 15 November 23 time strangle going up. People buying the puts and also buying the calls, doing that nearly 13,000 times. Again, might be closing on that put leg, which case would be kind of interesting, flipping from the short puts to the long nove calls, buying himself some upside room to run there if that is indeed the case. We have been talking a lot about VIX puts kind of being the trade du jour of late in our top 10 every week. VIX puts are lighting it up far more than they ever have before. which is interesting in and of itself. Also seeing it looks like a short AUG vertical perhaps going up here as well on Wednesday. The AUG 3040 paper is selling that out about 6,000 times for a nice dime, probably closing out something that they had sitting around. And we're hoping ever optimistically that 30 handle doesn't seem like it's going to be coming into play anytime soon. And then looking here really quick, down to Tuesday, we saw another 1x2. 1x2's kind of the trade du jour. I'm sure you see these going up a lot yourself, Bill, and we can get into some of the trades that have been catching your eye, if any, this week out there in VIX options as well very shortly. But we talk a lot here on the show, Bill, about 1x2s and another one going up. This one not for the size we typically see, not the million contract size, but still it was the AUG 17 21 vertical going up 7,000 by 14,000, buying 17, selling the 21s. So it is perhaps closing out again of a short 1x2 that they had on before. So it could be potentially a lot of closing paper we saw coming in this week, even not just in the July, obviously, but also out in the AUG, as well as those strikes become less relevant, taking them off the table. And on Monday, we saw a couple of big prints in particular, closing out some July, as you might imagine, the July 16 calls. Paper blasting out a bunch of those to the tune of about 20,000 for a whopping 6 cents, taking those bad boys off the table. Remember, we said for most of the month that the July 30s were the hot, heaviest strike with nearly 500,000 contracts open out there, and now blasting out the 16s for 6 cents. It shows you how far we've fallen, how much has changed in the landscape just in the past month or so. And of course, the July 15 puts also taken off about 10,000 of those boys for about $1.80 or so. And winding it down there with the August 24 calls. Got to get used to saying August more now, not July. 10,000 of those going up for about 41 cents. So that's a lot of weird paper. Not a ton to parse this week, Bill. But that said, a kind of very relatively light volume week. But I know you watch a lot of the VIX options paper going up, or maybe also in some of the related products like VXX and others. I know you watch a lot of those as well. Any interesting options, trades, or prints going up that kind of caught your eye? You thought were worthy of note here on the old program?
You know, I think you highlighted some of the ones. You know, I actually don't trade order flow as much as some of the other people who I think grew up on the exchange. So I have a slightly different perspective. But some interesting things. First noting today, you know, the biggest volume in the August 30s, and then the 40s and the 28s. So lots of nibbling on the high side through spreads and some outright for. You know, it's so inexpensive. Although on the other hand, you can still, you know, for 10 or 15 cents, you can get some August 30 action. You mentioned the VVIX, something that many of us struggle with to use as an indicator, and probably best as a secondary or tertiary indicator. On the other hand, if you're buying and selling VIX options, and you see volatility very low, but VVIX not as low as VIX and some of the others in terms of a percentage basis and range. So that does indicate, in one of the trades that I put on, short straddles this week, something I haven't done in months, given where I saw the VVIX relative to VIX in terms of stuff. So the VVIX being high, I shouldn't say high, not as low as some of the other volatility indicators, creates some interesting opportunities that I'm looking at that I normally don't look at, just because I don't like being long volatility. And so this creates some interesting opportunities.
Interesting. So some straight up short straddles, or do you have maybe futures against that, or some other call kickers? What is your
short straddles? Some of them with some call kickers, and you know, I can certainly move quickly if I need to add some call kickers in there, but I'm certainly not fishing in the August 30 ocean for those kickers.
Yeah, no Aug 30s in the Bill Luby portfolio. I like it. Short straddles, go big or go home. I like it, sir. You know, putting meat where the rubber meets the road, putting the money where your mouth is, proverbially and literally. So interesting stuff. You know,
not in front of the Brexit steamroller though.
Yeah, that's true. That's true. You were mentioning, talking about letting the vol come back to you. I was talking with someone just the other day who was telling me how they shorted some puts. I think it was in the S, and they went against him pretty hard post-Brexit. I think he sold them for $4. They went to $40 almost immediately, and he kind of just did the old bite the bullet and wait. And usually that trade never works out. In his favor, it actually did. They went back down sub $4, and he was able to close out that horrific trade for an actual profit. So I guess that if you just had some patience, as difficult as it was, and I know a lot of risk managers are tapping people on the shoulder post-Brexit to close a lot of those out. And that usually is the smart play, but he had luck in his favor. We'll see how that rolls going forward. Picking on going forward and looking back as well, what was lighting it up both this week and over time out here in the VIX options landscape. Like I said, all the July kind of coming off the board, so that kind of resets the hot strikes for an open interest perspective for the week. And so now we used to say the July 30s were number one with the bullet, and they were. The 500,000 contracts open for pretty much the entire lifespan of that contract. Now our number one is a substantially smaller number. It's the AUG 18s. A little bit more realistic, though, than the AUG 30s, with about 176,000 of those bad boys open. They've taken the number one spot this week. Number two, I was just saying how unrealistic the 30 strike is. Well, they're not giving up on the 30s and AUG as well. The AUG 30s, about a similar number, about 175,000 open of those. So the 30 strike, Bill, clearly still the strike of interest, the strike du jour out there. No matter how low we go in the VIX itself, the 30 strike continues to remain relevant for a certain segment of the audience, at least. Number three, the AUG 21s with about 136,000, so we're falling off pretty abruptly now. Number four, AUG 20s, pretty much all AUG all the time on the list for the most part, with about 128,000 there. Number five, the AUG 24s, all the way down to number six to get the first put on the list. It's the AUG 16 put with 121,000 open there. Number seven, also put in September, actually, the SEP 17 puts with about 120,000 contracts open. Following number eight, the SEP 30s. Again, that 30 strike, doesn't matter what the month is, doesn't matter where we're printing in the VIX Cash, if we're down in the low teens, if we're in the mid-20s, that 30 strike just has fascination for a certain segment of the audience. 115,000 open there. Number nine, the SEP 19s. A little more realistic there, 107,000. And winding up the top 10, 102,000 of the AUG 22s. Total just shy of 5 million contracts open, about 3.4 on the calls, about 1.5 or so on the puts. Again, July coming off the board is going to knock those numbers down quite a bit. Give it a week or two, and they'll start to pick up again. And before I move off the big VIX options and other stuff, Bill, kind of interesting, I noted here on the chart, we had a lot of puts sliding it up in the top 10. That's kind of unusual for us. Kind of one of the big narratives of the past month or so has kind of been just that explosion of interest in VIX puts. I can't remember the last time on this program. We've been doing this program for a while. The last time we talked this much about puts in VIX. It's always, VIX. It's always all calls all the time. 2.5, 3, 4, 5 to 1 calls over puts out there in VIX on any given day. And yet to see puts trading as much as we did, the July 15s and 16s were extremely active out there. Were you sling a lot of puts out there in Luby land, aka VIX and More? And also, what are your thoughts on kind of just VIX puts kind of becoming relevant for the first time again in quite some time? Maybe this is a brief respite for them, and they'll kind of go away after that, or you think we're going to be talking VIX puts again here for a little while?
I doubt it. I mean, hardly ever. I mean, when I put the short straddle on, I saw some puts on there, and it looked kind of strange to see some VIX puts on my positions. But the problem with VIX puts when the VIX is low is it's literally squeezing pennies of water out of a large stone, and it's very difficult to come by. Now, depending on how you approach risk management, if you assume the VIX can only go down to 10 or 11, that's a pretty limited downside. But if you're institutionally obligated to have some sort of spread on it, I can see why you might want to get involved on that side. For instance, if if you have some sort of butterfly or condor or whatever, do you bother with the low leg, the cheap put leg? But selling puts. Buying puts, yes. Buying puts when we thought 13 was kind of the theoretical current market bottom for the VIX. Those that had figured that 12 or 11.5 might be doable had some opportunities, but it's really like playing for pennies versus dollars with puts instead of calls. I mean, there are some trades out there, but the numbers are just so small. It's really hard to drive drive much profit through the put window, if you will.
Yeah, it isn't as sexy to try to capture that move from 15 down to 13 or 12 as it is that gap up from 18 to 28 or 30 or whatever the upside move we've seen in VIX. We know VIX is prone to outperform to the upside, not really to the downside. So the call's a little bit sexier out there in VIX land. But you're right, puts have been kind of the order of the day. We'll see. If we kind of just continue to vacillate around here, that probably won't come to pass. Certainly if we rally again, maybe some puts might come back into people's minds if we get into the 20-plus handle range again, or at least into the high teens. But right now you're right with VIX hovering on the downside of that recent range. Not a lot of interest in loading up on puts to move from, let's say, 12 down to 9 or 10, if that even is realistic on the downside. Switching gears here. We are, of course, in earnings season. You might not know it, Bill, by looking at the VIX right now. But, there are earnings popping off. There were a number of names reporting this week, including a few more just coming out after the bell last night. Last night we talked about a few, including on the odd block, including AT&T. If you're old school in the business, that was telephone. They were pricing out about 40. They're about an 80-cent straddle, about 2%. And in the old after hours, they gave up only about 50 cents or so. And then now here after the open, they're up about a 50-odd cents, or about 1.5%. So not really lighting it up. But the one kind of caught our eye. We always like to watch Chipotle for a variety of reasons. We used to joke about them being the proverbial stealth Apple, we used to call them, because they were similarly priced at the time, not getting anywhere near the attention that Apple was a few years ago. But now fast forward a couple of years, and Apple a little bit cheaper due to the split. Chipotle still relatively expensive and getting a lot of attention, perhaps not the attention they really want for multiple outbreaks or reported outbreaks of salmonella and other foodborne illnesses at their restaurants. That, of course, weighing heavily on their numbers last night. They were pricing at about a 31.50 straddle, so that worked out to about 7.5%. After hours, it kind of seemed like the market was shrugging it off. It was only down about 6 handles, so only about a fifth of what they were pricing in for the straddle. As the day came in, as they opened, they're up about 5% right now, about 20 handles. Still underperforming from a straddle perspective or from a vol perspective, but a little bit more of a surprise. I guess the market, after they digested the news, pun intended, decided perhaps it wasn't as bad as they initially thought. E-Trade also kind of a bit of a resounding meh up there on the earnings board. They were pricing in about $1, so about 4%. They were closing right around the 25 handle or so yesterday, and they were up in the after hours, up about 50 cents or about 2%. And looking at today, they're still up about 2% after the open. So interesting stuff there. Good old S-Bucks, Starbucks, one of my old stomping grounds back on the SIBO days, and that one was also pricing in about a little over $2 straddle. That worked out to about 4%. They went out yesterday about 57.5 or so, and they're trading about 30 cents higher right now today. So they're at one point in the after hours, though, they were down about 3%, nearly $2. So again, another turnaround for them here, as well as perhaps the market after they digest their news yet again, deciding upside was the way to go after all. And then winding it down, one of the other bigger names reporting earlier this week was good old Softy. We were kind of joking about them on the option block, and we have joked about them in the past for a long time. Nearly a decade, they were one of the more reliable premium writes in the business. They weren't very volatile. They didn't give you a lot of premium, but what you sold, you could reliably harvest a decent percentage of it. The stock didn't really move that much post earnings, so it was kind of a reliable bit of income play you could do for quite a long time. That not so much the case anymore, as Microsoft beginning to move, being a little bit more volatile, a little bit more turbulent. Earlier this week, they closed right around 53 handle going into their earnings. They were pricing in about a $2.50 straddle, so that works out to about 5% or so. And they opened approximately about $3 higher the next day. So outpacing a little bit to the upside. So things perhaps looking good. Maybe the new Xbox on the horizon or whatever else it is, combining to turn around the fortunes of good old Softy. Bill, it's been a lot of earnings going off this week, and over the last couple of weeks, we are indeed in the heart of earnings season here. Any of these big names catching your eye, and you adding any of these to the Luby land money management portfolios over there?
And I trade mostly in the ETPs, not in the underlying stocks, but I do keep an eye on certain activity in certain big names. So it's interesting to see Starbucks, which had a unremarkable report, yet it seems like the buy and the dip crowd is jumping in. That tells me a little bit about the market sentiment and what people are looking to add to their portfolio here on a pullback. And Microsoft is an interesting story, and I think they're doing an excellent job of transitioning. Unlike IBM, they're redoing their business quickly and transitioning to some cloud-based opportunities, and they seem to have they're now a clear number 2 behind Amazon in the web services space. And so there's some interesting opportunities. And though I don't like the individual, I don't buy the individual stocks, I like what they're doing, and I think it says a little bit about the whole space and SKYY, the cloud ETF, and some of the things that are going on there.
Yeah, cloud, obviously a big buzzword out there these days. AWS kind of rules the roost, but you're right. Microsoft kind of peeking up in the rear view mirror. Maybe they'll make it. They certainly have the capital to make a play in that space, or any space really, if they are so inclined. Perhaps not as much as they used to, but still decent earnings coming in off things like Windows and Office, of course, being a big driver for them over there. Let's move off really quickly before we get to some of your questions here. Some of the other segments that kind of catch our eye. Bill, I'm not sure how much you pay attention to the commodities out there. We like to watch a few in particular, the Texas tea and some of the shiny stuff. And crude's been an interesting one to watch of late. Of course, if you're interested in crude, listeners, we do a deep dive into that later on today, actually, on our This Week in Futures Options program, streaming live at 3 p.m. if you can join us live. Otherwise, after the fact, wherever you find your favorite Options Insider podcasts. OIV and OVX, of course, the 2 VIXs out there for WTI and USO, respectively. Both well off their highs for the year. Remember, in the rock'em sock'em period of February into early March there, things were very volatile. Crude, of course, also very volatile. OIV and OVX were kind of hitting their highs there right around, I think, about the 80 or so handle. And today they're about 50%, about half of what they were. Both of them fluctuating around the 39 level right now. So from a volatility perspective, if you're out there to harvest some premium out there, and let's say a WTI or USO, you may perhaps be disenchanted by those numbers, as vol certainly has come off pretty aggressively. Looking at the volatility skew out there in the big WTI options as well, the narrative kind of remains the same as it has over the past few weeks to months, is where puts are really still leading the dance out there. We've seen a few moments where maybe some minute blips to the upside where calls have kind of sparked to life very quickly, mostly in the near term of the options. We're looking here, this chart goes out to about early 2017, and the calls and the near-term calls have a little bit of life, but yeah, it's all puts pretty much all the time, all the way down south of the 40 handle into the 37 halves and 35 range or so. People paying some relatively inflated levels for puts. So vol is low, but maybe if you are inclined into getting into some crude at some of those lower levels, maybe some of those higher put premiums may entice you to write a few contracts out there. Who knows? Maybe a nice bullish risk reversal out there in crude, with the calls being a little bit cheaper as well. Maybe that's the way you want to go if you are indeed a crude bull. And we also look at gold here, Bill. And gold's been an interesting one to watch of late. A few weeks ago, we were remarking on how just extremely call heavy that gold skew was, partly or really primarily as a result of the huge flight into gold post-Brexit. We saw everyone and their mother piling into the calls. It was pretty much at the top of their 52-week peak from a skew perspective. That has evened out substantially over the subsequent weeks, and looking at it today, it's nearly symmetrical, not quite a smile, but getting pretty darn close to it. The puts are certainly far more relevant than they were even a week ago out there. Calls still juicy, but nowhere near almost the sheer, straight, vertical upside cliff that it was a couple of weeks ago, all calls to the upside. That said, Bill, do you watch any of these commodities and the commodity vol? Does that factor into the basket of products that you look at, or are you exclusively equity and index vol these days?
No, they factor heavily in. Gold and oil in particular, but some others as well. On the oil, I'd make the comment that we have gotten used to post that Thanksgiving 2014 Saudi declaration that they weren't going to cut back production, of oil OVX, the oil vol, being up in the 40s and 50s, and as you mentioned, even as high as 80. But if you look back really from from 09 to 14, it's more typically been around the 30 area. So it seems elevated from the last 2 years from all the chaos we've had about the supply glut and what that means in terms of bankruptcies and in terms of sovereign nation output and all that. But we're still in an elevated if you take a longer term time frame. So even though oil seems to be flattening and the OVX has pulled back, if there's a good case to be made so that oil volatility remains elevated. So wouldn't necessarily be so quick to rule out continued decline in volatility. With respect to gold, interesting, the GDX, the gold miners options, tend to get more volume lately than the GLD, the ETF. And there's been a little bit of a divergence, and it was interesting to see that gold actually topped out and headed down a little faster than the GDX, the miners, which seemed to carry a little more momentum to the upside. But now both just seem to have found a short-term bottom, and it's possible that run is over for now, at least, as central banks seem to be panicking less, and investors seem to, if they're not regaining confidence in the central banks, at least the collapse of the central bank and their inability to manage the economy is not now the headline story, as interest rates have started to tick back up, and Draghi didn't push the panic button the other day. So there's some small windows that perhaps are reasoning that the currency crisis is not necessarily going to get worse from this point forward.
Interesting stuff. We'll have to leave the vol review there. We went on pretty long, but a lot of interesting topics to discuss this week. And we had you on the show in a while, Bill, so I wanted to have you have a chance to weigh in on a few of those. Now it's time for our listeners to weigh in and dive into our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL, posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Volatility Voicemail. Like the name implies, this is indeed the portion of the program where you guys get to take the reins with your questions and your comments, and I can sit back and relax. No, I wish. All right, we'll see how many we could squeeze in here, Bill, as we are kind of running up against it. Let's start off here, nice basic one from Al08, or Al08. I'm not sure how he pronounces that. Either way, here he writes, IV or HV, which is most important? Which should I pay attention to? Of course, IV being implied volatility, HV being historical volatility, a.k.a. realized volatility. Call it what you will. I tend to call it realized. People kind of call it historical. Tomato. But which is most important? That's kind of an interesting, kind of loaded question. Obviously, IV, implied vol, being the price you're actually going to pay or harvest in the marketplace. So clearly, that is very important. It also shows you what the market is actually projecting going forward. So that is clearly very important. But realized also what actually happened. Also very important. And it tends to, hopefully, if all things are working correctly, inform the implied vol. So you can't really, I don't know, it's like an Oreo cookie. You can separate them. They taste pretty good in the layers, but you got to kind of eat it together too sometimes. And you got to kind of take vol, I think. You got to take post pieces. I can't imagine focusing exclusively on implied vol without having any understanding of what the market's been doing for the last few sessions or weeks or months, whatever your time frame is. And the same thing with historical vol. You can't just look at historical vol and then say, okay, based exclusively on this and having very, very limited knowledge of what's actually trading right now in the marketplace, I'm now going to try to execute some transactions. I think either one of those roads lies a ruin. You're kind of leaving half of the discussion off the table. So I kind of have to split the difference on his take the old Solomon approach and say you kind of need both. I can't imagine really looking at one exclusively to the detriment of the other. That said, Bill, you're doing a lot of modeling over there in your money management arm. Do you favor one of these over the other, or are you kind of like a Goldilocks, a little bit of both?
I'll try and be pithy here, but yeah, I'm pretty much in agreement with you. If I were forced to live with only one in the options world, I could do that with just implied, but But as far as I'm concerned, you really need both to compare one against the other. And it gives it just a much richer context to be able to look at various aspects of one versus the other.
Let's see. We got a few others that are kind of pithy. Maybe we can get, here's one from Jack King. This is an interesting, quick question on the surface, but a little bit more detailed discussion underneath. He asks, what is the primary driver of volatility skew, puts or calls? It's kind of interesting. You know, we've kind of discussed this on the show in the past, Bill, things like the skew index and things that kind of give out this one number to encapsulate all a skew. They really kind of miss some of the nuance of the conversation. In fact, this is the conversation we've also had on our TWIFO, This Week in Futures Options show a lot, because we're able on that show to dig a little bit more deeply into the skew using some of the tools over there on the quick strike stuff. And you can see the movements in the different wings. And traditionally, skew, of course, quoted in most equity and index contexts, with the put being the premium. So the put is kind of the driving force there. That's where the higher volatility level is. So skew is usually quoted in terms of the put. So I guess if you want to think of it in that sense, the put is the driver. But when we see changes in things like the skew index, which is, I think, was around a 125, 128 or so right now, you don't look at that number by itself. It doesn't really tell you a lot. It doesn't tell you if the calls are cheap, if the puts are expensive, or it's a combination of both that is really arriving at that number. So I guess my short answer to that would be, you know, the puts are what the price is kind of driving off of. So you kind of, I guess if you had to pick one, you kind of have to go with that. They're usually the juicier, the bigger component of the skew, but the changes, and that's kind of what's important, is the change that could come from kind of both areas. And so that's kind of interesting to watch, particularly as we have on the other program gotten into some of the commodity products as well and looking at their skews and how they evolve. When you start getting beyond plain vanilla investment skew into things like some commodity skews and smiles and upside heavy skews and things like that, you start to see how much the different wings actually play into it. And it's a little bit more interesting and nuanced conversation. That said, Bill, have at it. What do you say for our friend here, Mr. Jack King, who wants to know which wins in that argument? A lot of binary choices from our listeners today. Is it IV or HV? Is it puts or calls? I don't know. They want stark contrast today.
This is a great question, and I'm generally in agreement with what you said. I think for the most part, puts will dominate, but I think it's important to look at the volume for each product. So, for instance, SPX and the equity indices, you would expect to see more put activity from the hedging. Therefore, the puts are going to dominate. But look at the VIX, and you see the panic in the VIX on the call side and more call activity. So really, the calls are more important there. And flipping to commodities, you'll see more activity generally in puts in oil and for instance, calls in gold. So again, focus on where the volume is on which side, and I think that will probably lead you to which one to focus on. But generally, as a default, puts.
Yeah, puts definitely the default winner in equity land. You get out into some commodities and other things. It could be a free-for-all, anyone's guess, depending on the product and the time you're trading it and the paper flow and all the other factors you have to consider. But still, interesting, very binary questions. We got a bunch more. Unfortunately, we don't have time to get to those other ones. Hopefully, we'll get to more of those next week. We've got to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Bill, if you're not familiar, this is the portion of the show where we embarrass ourselves horribly as we attempt to predict what the volatility gods hold in store for the coming week. A quick breakdown of last week's predictions. I'm still feeling a little bit more. I'm not feeling these low levels, so I was feeling about a 13.25 in the VIX Cash. Russell trying to come up me on the upside, going 13.51. That was his prediction. The Greasy Meatball, or was it Andrew? I forgot last week. One of those two. Taking a little bit of the lower end, so they're the clear winner this week. They picked 12.25, and we're at right now at the end of the show at about a 12.13. So they get to win the week. Unfortunately, they are not here, so they don't get to pick this week. We'll actually give them the favor last time, and Russell's not here either, so we'll make picks for them in the form of the ghost of Mark and Andrew and the ghost of Russell. Last time, Bill, when Russell wasn't on and his ghost picked for him, and he actually did very well. I meant to humiliate him, and in the process actually gave him a very great pick. So his ghost is one of the best pickers on the show right now. But that said, you're our guest. So maybe I'll give you the somewhat dubious honor of going first. The aim of this segment, obviously, trying to guesstimate where VIX Cash will be at this time next week. So during showtime, towards the end of showtime, what are you feeling? You feeling a little bit more elevated? You think earnings and maybe the Fed will kick some juice into the marketplace? Do you think we're kind of in the summer doldrums and it's just going to quietly erode into the 11 handle? Who knows? Maybe you're more stark to the downside. Maybe you think we got a 9 handle in us next week. I don't want to put words in your mouth. So what are you feeling for next week, Bill?
No, I think between the Fed and the ECB bank stress test, there's a good opportunity we move higher, but I don't think it'll be that much higher. So in keeping with Russell not picking round numbers, I'll go with 12.71, which incidentally is a little bit higher than the 10-day moving average in the VIX, much to my surprise as I look at it.
I've been trying to keep the love alive. I've been picking slightly higher every week, thinking this is going to be the week where we finally get a little bit of a bump, and I've been disappointed to the downside every single time. So I'm actually going to flip my script this time here, Bill. I'm going to go a little bit slightly to the downside. I'm going to say nice 11.5 or so. Next week. So that will be the Fed will have come and gone, and we'll kind of just be into these late summer doldrums. We know we start getting into late July, early August. Most of the institutional crowd that trades the SPX and the VIX, particularly a lot of the French guys who we know there are a lot of head off to the Riviera and everything else, and not a lot gets done out there. That, of course, could work against me. It could be very thin, and VIX could spike, so you never know. But I'm gonna predict the long, slow decline. And since they're not here, they get to pick haphazardly. So the ghost of the greasy meatball, he's going to be really, really crazy to the downside. He's going to say a nice 9.5. And Russell's always very elevated, so he's going to pick a very, very aggressive 17.35 for next week. So there you go, Bill. See, lucky you were on the show to make an actual pick for yourself, because your pick is I think has a little bit better chance of paying off than those other two. Unfortunately, that theme music means we've come to the close of another fun episode. Bill, that really flew by. The hour flew by. You and I were just chatting away, and next thing I knew, the show was pretty much done. But before we go, Bill, let's check back in. You mentioned at the top of the show you're working on a lot of interesting things, including posting more at VIX and More. People want to head to the blog, of course, they can go to VIX and More to check that out for themselves. Maybe give them a little bit of a plug of what you're working on over there, as well as if they're maybe intrigued by things you said here on the show today, and they want to check out your money management arm. Where should they go? What should they do?
They can find information from that on VIX and More, or they can email me at bill@lubyasset.com, LUBY-asset.com.
There you go. Nice and short and sweet and to the point. I like it. And, of course, they couldn't be here, but check out our friends over there in the land. Option Pit. They're busy doing their professional trader summit. I was there yesterday and the day before. A lot of great attendees there, asking a lot of great questions to us yesterday. So thank you to all the people there as well who are asking questions, and I know our dedicated listeners to all of our programming. And one of the things Russell was doing, he's out traveling, I think actually off to see the live vol guys. I actually didn't get a chance to see them yesterday at the Professional Trader Summit, but check them out, of course, CBOE Live Vol. That's livevol.com. One of the easiest way to get them. We, of course, use Live Vol Pro throughout the show. A lot of the stats we're throwing at you, the numbers, the volume, the IV, the HV, all that stuff, all coming courtesy of the Live Vol Pro platform. Check it out for yourself, livevol.com. Or, of course, if you want some data to analyze, the Data Shop, also where you want to go. Search for Data Shop Live Vol and check it out for yourself. And on behalf of Russell and the Greasy Meatball and Andrew, who could not be here, and indeed our guest Bill, who could, and myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, for all of you who joined us live in the Mixler chat, we love you guys as well. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.